On August 16th, the National Bureau of Statistics in China released the economic data for July, almost all of which were worse than what anyone had expected. On August 17th, the three major mainland stock indexes all fell 2%, and more than 3,000 stocks in Shanghai and Shenzhen stock markets fell. Statistics shows that the added value of industrial enterprises with annual revenues above $3 million increased by 6.4% annually, which is the lowest since August last year. The total retail sales of consumer goods increased by 8.5% annually, and investment in real estate development increased by 12.7% year-on-year, both of which were the lowest this year. In July, the nationwide survey showed that the unemployment rate in urban areas was 5.1%. Among them, the unemployment rate of 16 to 24-year-olds was as high as 16.2%, more than 3 times the overall unemployment rate in urban areas. The two most important and forward-looking data that reflect the economic situation showed that the M2 for social financing and the currency in circulation also fell beyond expectations. The increase in social financing in July was only $160 billion, a new 17-month low. It has not even reached a third of the $570 billion last month, with a decrease of $97.2 billion from the same period last year. The sharp decline in social finance means that there is insufficient financing demand, and insufficient financing demand means insufficient economic vitality, which means that both consumption and investments will decline. Therefore, through the decline of social financial data, we can also judge the result of the economic downturn. In addition, since the second half of the year, credit allocation in the banking sector has weakened, and new loans have been the lowest since October of last year. The real economy's credit demand is now obviously insufficient. Savings data shows that in July, RMB and foreign currency savings also fell, with a decrease of 1.13 trillion yuan and $23 billion respectively. Mainland Chinese economist Ren Zeping pointed out in an article on the WeChat account Zeping Macro on the 17th that some views attributed the overall fall in economic and financial data in July to short-term factors such as the rebound of the recent local epidemic and flooding. But this can hardly explain the fall in social financing, real estate sales, new export orders, and other leading indicators for 4 consecutive months. He pointed out that the economy has its own cyclical pattern: recovery, overheating, stagflation, recession. China may be in the economic stage of stagflation to recession, but it should evaluate the pressure of future economic downturn and do preparations. There are many reasons for China's economic downturn. Based on the analysis of media reports and experts, we believe that the main reasons are lying in 6 aspects. First of all, China's strict absolute zero infection policy has imposed high costs on the economy. Since the first local case of the Delta variant was reported in Nanjing in late July, a new wave of infections has broken out in at least 17 provinces. To prevent the epidemic from spreading, Beijing authorities have adopted a strict approach and demanded all active cases be cleared out. Wherever in the city, if even one case was detected, not only are millions of people forced to take mandatory nucleic acid tests, but also a full range of travel restrictions and lockdowns will be imposed, regardless of the cost. For example, on August 11th, an employee of Meidong Terminal in Ningbo Port, Zhejiang Province, tested positive for COVID-19. The port area where he worked was completely sealed off and the terminal ceased operations, affecting more than 2,000 workers. The Meidong Terminal is the second largest container terminal in China, handling 1.2 billion tons of cargo per year, and the damage it caused by stopping for even one day was incalculable. It was recently reported that, due to the epidemic, the freight rate of 40-foot containers from China to U.S. East has now historically exceeded the $20,000 mark, and the freight rate index to the west coast of North America reached $18,555 on the same day, both more than 5 times that of the same period last year. China's Ministry of Transport issued a notice on August 3rd, putting various epidemic prevention requirements into force, such as crew members should not go ashore unless necessary, shore personnel should not board the ship unless necessary, and ship and shore personnel should not make contact directly, which also greatly reduced the operation efficiency of the port. Secondly, the uncertainty of China's policies and the crackdown on private enterprises have not only severely affected investor confidence, but also caused the unemployment rate to rise. For example, the Chinese online ride-hailing service company Didi went public on June 30th in the United States, and China's Cyberspace Administration Office notified the App Store on July 4th to remove the Didi app. The reason given was seriously illegally collecting and using individuals' information. Later, 7 departments, including the Cyberspace Administration Office, jointly conducted a cybersecurity review on Didi. On July 22nd, sources familiar with the matter revealed that Beijing authorities are considering punishing Didi, including bringing in state-owned capital and the handover of equity, which is more severe than the punishment of Alibaba Group. Subsequently, the CCP authorities implemented a full-scale crackdown on the out-of-school education and training industry. Since the authorities issued relevant documents, the entire industry has suffered a disaster. News of layoffs and bankruptcies have continued to be heard. The number of layoffs may reach tens of millions, and most of them are young people. In recent days, even Tencent, ByteDance, Meituan, and other high-tech internet companies have all been subjected to anti-monopoly investigations many times and are under pressure from the CCP authorities. The crackdown on private enterprises is also ongoing. On July 28th, Sun Dawu, the founder of China's private enterprise Dawu Group, was sentenced by a court to 18 years in prison, and his immediate family members were also sentenced to heavy prison terms. Last year, after Sun's family was arrested by the authorities, the local government sent 29 working groups to take over the Dawu Agricultural and Livestock Group. In 1985, Sun Dawu started by raising pigs and chickens and founded the Dawu Farming Group. By 2020, its fixed assets were $300 million and its annual output exceeded $460 million, making it one of the top 500 private enterprises in China. Sun likes to participate in political discussions and express his views on the development of the country and is known for his outspokenness. He is known as the conscience of the Chinese entrepreneurs, but his comments are hated by the Chinese Communist Party. Sun was tortured in prison in a way worse than death. He was subjected to an exhausting trial that lasted 14 consecutive days, averaging more than 12 hours per day. During his closing arguments in court, he questioned the court's verdict. Is it dangerous for a private enterprise to get bigger? Is it not dangerous for state-owned enterprises to grow bigger? Can this theory be valid? Third, the real estate market has continued to fall due to policy suppression. A large part of China's economic growth in the first half of the year was driven by real estate investment, but the government's suppression of the real estate industry became more and more severe. In 2021, policies issued by various local governments to regulate and control the real estate market has been more and more frequent. According to data from Zhongyuan Real Estate Research Center, in the first 7 months of this year, there were 352 policies introduced, with an average of 50 per month. There were 66 in July alone. The core feature of these policies is tightening the market. Features including interviews with the Ministry of Housing and Urban-Rural Development, rectifying intermediaries, restrictions on second-hand housing pricing, strict supervision on operating loans, land supply, encouragement of renting, and cracking down on school district housing speculation. This kind of strict control policy has put China's real estate industry in a downturn. For example, in Shenzhen, where the housing market was still very hot last year, is now practically frozen, and the second-hand housing market has plummeted by 80%. Data from the Shenzhen housing authorities show that in July 2021, only 4,474 newly built apartment units were sold, down 15.83% year-on-year. Shenzhen's intermediary industry is experiencing unprecedented store closures and resignations. Even some real estate agents who have been in the sector for 20 years have to close their business. Due to the lack of orders, they cannot afford the expensive rentals. Some realtors have not closed a deal in a whole year. What they can do is only to change careers. The fourth is that exports continue to fall. the growth rate of exports dropped from 28.1% in June to 24.5% in July, which was much lower than market expectations. Among them, textiles and clothing saw a larger decline. This is largely because export orders from other Southeastern Asian countries have begun to recover, so orders that have flowed into China due to the epidemic have flowed out again. Coupled with the fact that the price of raw materials is currently the highest in 2 years, even if companies do not lose orders, they often have no profits. This naturally leads to a decline in export numbers. Fifth, local government debts is too high to invest in. According to data released in June, 87% of new bonds issued by local governments are used to repay old debts. This means that local governments do not have enough funds to invest to drive economic growth. Selling state-owned construction land use rights is the biggest income source for local governments. Last year, the land sales revenue of all cities in China reached $1.3 trillion, accounting for 46% of the national fiscal revenue, 84% of the fiscal revenue of local governments. But this piece of cake is about to be touched by the central government. Chinese Ministry of Finance and other 3 ministries jointly issued a notice deciding to transfer the 4 government non-tax revenues to the Taxation Department for collection. This includes the selling of state-owned land use rights, special income from mineral resources, port area usage fees, and non-resident island usage fees. From January 1st, 2022, the collection, management, and transfer work will be fully implemented. Earlier, the local government's income from selling land use rights was unclear to the central government, and it was equivalent to having a small local treasury. In the future, this income will be collected by the Taxation Department and directly managed by the central government. Although the expropriation rules and the status quo of the local government will not be changed, it will have a great impact on them. Some analysts warn that if local governments at all levels cannot make income from selling land use rights, it is estimated that their normal operations will be a problem. And finally, there is a downturn in China's consumer market. This is not only the impact of the epidemic, but also the currently rising unemployment rate and the decline in residents' income. The economic downturn and the rise of raw material prices have led to a decline in profits and even the closure of many enterprises. To survive, companies can only reduce labor costs, resulting in even lower wages and a higher amount of unemployment. Together with high inflation, this has caused a downturn in the consumer market. In summary, the economic data for July reflects the huge pressure on China's overall economic growth in the second half of the year. This pressure will force the government to maintain a certain degree of support in macroeconomic policies. Hong Kong economist Dr. Lau Ka-Chang analyzed that the worst period of the epidemic has passed. Since the second half of last year, the economies of many countries have rebounded strongly. By this year, they have generally recovered. But on the contrary, China's economy is getting worse.